To a certain degree, we are overweight on some of the upstream sectors that we believe will benefit from the increasing demand and also very strong economic recovery. And meanwhile, we are trying to be a bit more cautious on some of the downstream names and or industries that have had difficulty passing through the pricing pressure into the end users.
So Raymond, I understand, at least from a country perspective here, you do like China. But given the gains we've seen on the month, how much additional upside do you think investors can eke out on the equities?
Yeah, we remain very positive on China, in particular onshore A shares, mainly because of a couple of reasons. First, valuation is still very reasonable at about 14 times forward PE. And earnings season so far in the first quarter have proven to surprise the street on the upside. So we think that there could continue to have upside risk to our base case scenario. And also, it's very important to note that A shares are pretty well balanced between cyclicals and growth. So in a market when participants are increasingly focused on value cyclicals, China A shares that are very much under-owned at the moment still have a lot of investment appeal in that regard.
And to what extent do you think the strength of the yuan is playing into this appeal, especially among foreign investors here? Because, of course, the PBOC, with some of these FX requirement rule tweaks, is paying attention to the strength of the yuan, and we just wonder, how long it lasts.
Yeah, I think it's a challenge because stable and rising yuan certainly provides a tailwind to China equities, in particular onshore A shares. But after all, we think that fundamental outlook is a lot more important in terms of sustaining the earnings growth momentum, which is going to drive upside to the China market at the moment. So we think that as long as currency would be held stable, given what PBOC has been very focused on doing, and avoid using this as a tool to try to stimulate export sales or to clamp down on commodity costs. We believe it's actually a long-term positive for China equities as a whole.